looks like we're working here. So it's been a few months since I've gone for a walk with you folks, and there's a little bit of noise in the background, so I hope it works out okay. But I thought I'd have a little chat regarding the changes or pending changes to the capital gains tax that's forthcoming. If you are a business owner or own secondary real estate or any kind of non-registered investment, you should be concerned about some of these pending changes. The government has put out a video recently from Justin Trudeau talking about how the taxes are not quite as bad as people are saying they are, and that they only affect a certain number of Canadians. And while he's technically right, I think that you just, even if you're not directly affected by these changes, you really do need to know what they are and how they could potentially affect you in the future. In my experience, the capital gains tax is a very misunderstood piece of legislation. What it boils down to is when you sell an asset, any asset at all, whether that's a stock portfolio, a piece of secondary real estate like a cottage, a business, or even your 40-year-old comic book collection, anything that you make over and above what you paid for it is called a capital gain. Most people would just consider that profit, and that's right. I mean, capital gain is just politician speak for profit. Where was I? I just got interrupted by a phone call. Hazards of recording videos on your phone. The good news is that, as Justin so helpfully pointed out in his video, the government doesn't actually tax 100% of your profit. They tax 50% of your profit. And that's not even to say that they're going to take 50% of your money, as some media outlets have kind of hysterically and incorrectly iterated or intimated or assumed. I'm not even sure which one of those words works. Sorry. Now the coming change is to tax 50% of the first $250,000 and 2/3 or 66.6% of anything over and above $250,000. And that's where Justin gets this whole idea that it's going to only affect a very small percentage of Canadians, because by the time you sell an asset like that, the number of people who are going to make $250,000 profit is pretty small. Let's be honest. But it's still a significant amount of money, or it can be. For example, my uncle sold his cottage last year. He sold it for $500,000. He bought it in the 1970s, or rather he bought the land and built on it in the 1970s. And over the years, other improvements he's made to it, the total thing cost him probably about $100,000. That means his profit when he sold it, or his capital gain, to speak like an accountant, when he sold it, was $400,000. So he had to pay tax. He had to declare a taxable income of half of that, $200,000. Tax on $200,000 at his tax rate was about $65K. Now, if he had sold it this year, or after June 25th of this year, his capital gain inclusion would have been $225,000. That's 50% of the first 250, and 2/3 of everything over and above of his profit. So that means his taxable income after everything was said and done this year, approximately $72,000. Now, that's a significant difference, and something that you need to be aware of moving forward. But here's the thing. What if I told you that I could reduce your tax bill to almost nothing and have someone else pay the bill for you. Now, it doesn't work for everybody, and I've actually probably already said too much for the compliance people who might get upset with me for even broaching the subject. But if you're an Ontario resident with non-registered assets such as real estate or a non-registered investment portfolio, or a business owner who's selling stock in a Canadian-controlled corporation, there is a way to transfer that liability through the use of life insurance to somebody else so that your estate doesn't have to pay the whole bill. If you're curious about how we can make that work for you, reach out and we'll have a conversation about it. That's all I got for you right now, and I hope this video worked because of all the noise, the very windy today on my walk, but that's it in a nutshell. I hope to hear from you soon.